Is it time to buy Tesla stock with a sale of shares done and stock shipments soaring? Welcome back to Stacking Stocks as we analyze the fundamentals of Tesla stock. Elon Musk has defied big odds and consistently beat expectations since taking the helm of the electric vehicle manufacturer in 2008. Now, with Musk having sold billions worth of Tesla stock and the company shattering fourth quarter delivery estimates, is Tesla stock a buy? Tesla delivered 308,600 vehicles worldwide in the fourth quarter, beating expectations for 263,000 vehicles. Tesla delivered 936,172 vehicles for the full year, up 87% from 2020. The figures smashed even the most upbeat of analyst expectations. Wedbush analyst Dan Ives called it a jaw-dropping and trophy case quarter in a note to clients. He also said the announcement speaks to an EV demand trajectory that looks robust for Tesla heading into 2022. He has a price target on Tesla stock of $1,400. The announcement on deliveries comes after Musk has completed selling 10% ownership stake in the company, a process that had caused Tesla stock to fall. The stock sale began after Tesla reported third quarter results that beat estimates despite chip shortages and supply chain bottleneck. Tesla is expected to report full fourth quarter results later this month. Ives in his report on Tesla said that at the same time there are many competitors in the EV space. Tesla continues to dominate market share while battling through the chip shortage and now is seeing the demand in China step up big time after facing headwinds earlier in 2021. Baird analyst George Giannakis estimated that underlying demand for electric vehicles in general and Tesla products specifically remains strong, with demand outstripping supply. He also states that the company achieved record deliveries every quarter in 2021, while the industry at large struggled to find its footing. On the other hand, RBC Capital Markets analyst Joseph Spack raised his price target on Tesla stock to $1,005 from $950. SPAC also raised his fourth quarter revenue outlook on Tesla to $17.6 billion, up from $15.3 billion. There are a lot of expectations for Tesla shares to start off strongly, but ultimately 2022 results are most dependent on the pace of capacity expansion. Tesla has undertaken a massive expansion of its manufacturing capabilities. Musk wants to eventually build 20 million electric vehicles a year over the next decade. That's more than double the current production of other automaking giants. So it's now on a mission to rapidly expand its manufacturing capabilities. Tesla will soon open plants near Austin, Texas, and Berlin, Germany, and is looking to expand its Shanghai facility yet again. The Austin and Berlin plants will make the Model Y. Tesla had said the plants would begin producing Model Y crossovers before the end of 2021, but it didn't happen. There are reports that the Austin plant will open soon. Tesla has received a temporary permit for the Berlin site, but not the final one. When the Austin and Berlin factories come online, they'll likely ramp up production slowly over time, along with ongoing Shanghai capacity increases. Now, when Tesla starts pumping out cars in Germany, it's going to be going head-to-head in electric vehicles with three established German names: Volkswagen Group, BMW, and the Mercedes-Benz division of Daimler AG. Other series competitors include General Motors and Ford, in addition to its China rivals. These include NIO, XPeng, and Li Auto. In the stock market, timing is critical. So when you're looking for stocks to buy or sell, it's important to do the fundamental and technical analysis that identifies lower risk entry points that also offer solid potential rewards. Tesla stock soared out of a double bottom base on January 3rd to kick off 2022, surging past a buy point. But the stock reversed hard as stocks with high price-to-earnings ratios came under heavy pressure. No doubt there's been some pessimism among investors regarding the growth potential of the electric vehicle sector. However, investors should be looking forward to the rest of 2022. Goldman Sachs analyst Mark Delaney issued a bullish take on the stock, increasing his 12-month price target to $1,200 while maintaining a buy rating. As he sees it, Tesla is the best-positioned company to help lead the transition to electric vehicles. Delaney cited the company's higher-than-expected deliveries for the fourth quarter of 2021 as a primary reason behind this mindset. Delaney also notes that Tesla is likely to expand margins in the intermediate term as it ramps the important Model Y product as well as new factories in Berlin, Germany, and Austin, Texas, and in the long term as it increases its mix of software revenue. German media confirms that in Berlin, at least production of 2,000 Model Ys has been approved, and in mid-February, production may commence in earnest. The factory's construction has experienced multiple delays due to environmental concerns. Goldman Sachs isn't the only bank to be raising its Tesla stock price predictions. Morgan Stanley analyst Adam Jonas upped his price target to $1,300 while maintaining a buy rating. Jonas also feels that the fourth quarter deliveries will lead to Tesla stock powering higher in 2022. This alone should be encouraging enough to many investors. The future of auto industry is certainly electric. By the end of 2025, EV adoption in North America will reach at least 5%, meaning that at least 1 out of every 20 cars we see on the roads will have a plug and be able to be driven either always or much of the time solely on electric power. By the end of 2025, at least 2% of all vehicles on North American roads will be Tesla vehicles. So yes, at least 40% of the electric vehicles in North America will be Tesla brand vehicles. Tesla's goal of pushing electric vehicles into the mainstream is gaining momentum with the company's steady growth in deliveries. As the EV manufacturer expands production, the number of delivered vehicles is also expected to hit record levels in 2022. Overall, Tesla deliveries are one of the most closely watched metrics for the company. The metric usually underpins the company's financial results and highlights the market's demand for electric vehicles. Generally, Tesla continues to increase its annual vehicle deliveries despite the EV industry facing challenges around the global supply chain and logistics related to the coronavirus pandemic. However, the company is known to design its chips in-house to beat the semiconductor shortage, an advantage it has over other competing automakers. At the same time, Tesla has also reprogrammed software to use less scarce chips. Tesla also looks to expand into massive volume production of those 4680 battery cells at Gigafactory Texas and Gigafactory Berlin simultaneously. The automaker is still buying as many battery cells as it can from suppliers, but we believe its own cell production this year is going to be a difference maker. In 2022, Wall Street is currently projecting deliveries of about 1.42 million vehicles, including 296,000 in the first quarter. That would amount to another year of big growth. Tesla has 2 new manufacturing facilities in Texas and Germany. They're going to be ramping up production early in 2022. The ability for Tesla to sell all that's coming out of its factories will be a big swing factor for the stock in 2022. Now, taking into consideration Tesla's better than expected fourth quarter delivery results and its near-term tailwinds for 2022, we're expecting the stock to hit some massive numbers. Despite global supply bottlenecks triggered by on and off COVID-related restrictions and industry-wide labor difficulties, Tesla's delivery results continue to indicate robust demand worldwide for EVs. It's also a testament to Tesla's strength in navigating through the global chip supply shortage by leveraging its ability to rewrite software and adapt to chip supply from various suppliers, as well as its ability to ramp productions at existing plants aggressively and effectively. This has allowed the company to fare better than comparable peers. Tesla remains in a better position than any other automaker in the industry when it comes to navigating through the unprecedented chip supply crisis, thanks to its ability to re-engineer software and adapt to varying chip supplies. 2022 will continue to be a key execution year for Tesla. You really need to watch out for Tesla stock. If you enjoyed the video, hit the notification bell for updates. Remember to like, share, and subscribe. Stay safe and see you next time right here on Stacking Stocks.